Alibaba reported earnings this morning and the stock is down 11.13%, and we're gonna see what happened. Hello everyone, welcome back to the channel. Today we're gonna talk about Alibaba, the stock performance, what analysts are expecting, what Baba is expecting for the rest of the year, their earnings and more. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. Now, as we can see, the stock is down 11.09% at the moment, and it had this huge gap this morning just after earnings as they reported before the market opened. So we can see that the stock has been in a complete downtrend since 2020. This was in October 2020 when the stock was at $319 per share and has been in a complete downtrend since then. If we put it on a weekly basis, we can see it way better. That has been crashing since then, as many things have been happening, not only with the company, but also with the government and the country they're in, which is China. Now, Alibaba missed expectations as earnings plunged 38% in the September quarter. And as we can see, revenue was 200 billion yuan, which is the Chinese currency, which is $31.4 billion. In comparison to 204.93 billion yuan estimated, and that's a 29% year-over-year rise, which in my opinion it's a good growth in comparison to all of the other e-commerce companies that have already reported earnings. They had a nice growth, but they missed analyst expectations just like many of all other companies within the industry, just like Amazon did. And also their EPS was 11.20 yuan versus 12.36 yuan estimated, a 38 year-on-year decline. I did post a tweet this morning with the dollars amount. They reported a revenue of 31.1 million in comparison to 32.10 million, and then for EPS, $1.75 per share versus $1.95 per share. Now, something they did mention here is that the company slashed its revenue guidance for its current fiscal year. It previously expected to bring in 930 billion yuan, which would have been about 29.5% year-on-year growth, but it now expects the growth to be between 20 to 23% year-over-year, and obviously that is not something that many liked. And they also explained that they have been facing intense competition from its rival JD.com, but also newer players like Pinduoduo and even social media companies like TikTok, Owner, ByteDance, and obviously that is affecting their revenue growth. As we can see, that it was 29.9%, which is still 29%, which is still a nice growth, but they were not able to beat analyst expectations. Now, here is their earnings report, and they said that this quarter Alibaba continued to firmly invest into their three strategic pillars of domestic consumption, globalization, and cloud computing to establish solid foundations. But for their revenue, they reported a revenue of 39% growth, as I said, year-over-year. And for their annual active consumers, they reached 1.24 billion for the 12 months ended on September 30th, 2021, which is an increase of 62 million from the 12 months ended June 30, 2021. That includes 953 million consumers in China and 285 million consumers overseas, which obviously is very important as we like to see this company also diversifying internationally, as we know all the problems that they have in their own country. Now, this represents a quarterly net increase of 41 million and 20 million respectively. This is their growth per segment of their business. As we can see, their commerce grew on a total of 33%. Their customer management only grew 3% year-over-year, but it was 36% of their revenue, while last year was 45% of their revenue. So they are seeing a decrease actually, or a slowdown in the segment, while the others segment, which includes sales business comprising mainly on Sun Art, Tmall's supermarket, Fresh Hippo, and direct import, they reported a growth of 111%, and it used to represent 17% of their revenue in 2020, while now represents 27% of their revenue. So they are having a very nice growth in this other side of their business in comparison to their customer management. Now, for the total commerce, we can see that they had a total growth of 31% year-over-year. And for the cloud computing, 33%, which I know that Amazon and Microsoft had better growth for their cloud computing business, but in my opinion, this is good. I understand that they need to improve this growth, as it used to represent 10% in the revenue for 2020, and it still represents 10% of the revenue for 2021. So we are expecting to see this actually growing, as the cloud computing has a lot of potential in the long term, and we are not seeing that growing, even though it grew 33% year over year, but still represents the same amount of the revenue. Now, in the total, they reported a revenue growth of 29%. Now, we can see here that they reported a revenue, as we said, $31.1 billion, which was a growth of 29%. But the thing here is that we can see that their net income was actually $833 million, which is a huge decrease if we see in RMB. They reported 28.7 billion RMB in 2020, and now they reported 5.3 billion RMB in 2021. So this is a huge decrease year over year for their net income, and was mainly because of this. As you can see here, their interest and investments investment income went down from 10.5 billion to negative 11.4 billion dollars. So they had 11.4 billion RMB. So they had 1.7 billion dollars, this is US dollars, in interest and investment net income, and also in income tax expenses grew massively from a negative 1.9 billion RMB to 6.07 billion RMB at the moment, which caused this huge decrease in net income. And obviously, investors don't like that, because we like to see that even though the revenue is growing 29%, we like to see their net income growing as well at the very same pace or even more than their net income. But we know all the problems that this company have been having with the country and all the issues that the country brings, because it is a communist country, and we know how it has affected every single Chinese company in the past year. Now, Alibaba, in my opinion, is really undervalued. It's currently trading at $143.89 per share. It is down $10.95, and it has a market cap of $408.68 billion at the moment. These are dollars, right? Yes, billion dollars at the moment, and I have a PE ratio of 17.12. Now, it currently has a price to sales ratio of 3.69. But if you ask me, this company is really undervalued, because they are currently reporting in the last 6 months a total revenue of $63 billion in the past 6 months, and which is a nice growth if we see year over year from 308.8 billion RMB to 406.4 billion RMBs. But we know all the problems that this company have been having, and that's why we can see the stock trending down, and it is still down 11% today. I'm currently not investing in this company because of all the issues around it. I understand the risk that this company brings as an e-commerce company, as a growth company, but it brings another kind of risk by being a Chinese company, which I understand many of you don't care about that and believe in it in the long term, and believe that they will be able to continue seeing a nice growth, which I believe that too. I believe that they will continue seeing a nice growth in the long term, and it has a nice long-term potential, as they are a big player, the leader in the industry for China, and they have been competing internationally as well. The thing is that the communist government that China has is really controlling, and they have been affecting a lot lately all of the Chinese companies, including Alibaba, mostly Alibaba. So that is a higher risk that this company brings. If you don't care about that risk, or you understand that risk and understand what can happen, and you decide to invest, then that is completely fine as well. I think that it is really undervalued. I used to invest in this stock years ago, 2 years ago, and I sold in 2020 in the last uptrend, but I'm not planning on entering again to this stock because of all the risk that it comes with the Chinese company, and I already have a lot of risk in my portfolio, so I don't want to add even more and more when the risk is out of my hands, and even out of their hands, because it is not something that the company is doing wrong, or that the growth is affecting them, or that they're spending money where they don't have to. No, it's something that if the government decides to do something that affects them, they will do it, and Alibaba will get affected. So I'm not currently investing in it. The numbers were not that good in my opinion for this quarter. I understand that previous quarters they were having better numbers, better growth, and they were getting affected by the government, but this quarter was not that good in my opinion. Now, in the long term, I see a potential. I understand the potential, the growth, and the probable return that this company could have, because as we can see, the stock has been on an uptrend since 2015. Yes, it went down in 2018 and then exploded in 2020 because of the pandemic. They got affected by it at the beginning, but then as every e-commerce company, they really benefited from that. But now it has been a complete downturn since then because of everything that have been happening in China. So thank you and see you next time.